Hello, welcome to another video from 10x Investor Education. In this video, I would like to talk about SENSEONICS, a penny stock whose has a Eversense glucose monitoring system. So, before going into the details, please remember this is not an investment advice. This is purely what I'm thinking about the stock and why the stock is up almost 50% in a week, how it is going to look up next couple of weeks, and how we want to trade this stock. Again, as I said, this is not investment advice. So before getting into the SENSEONICS, I would like to talk about stocks that I have been buying. So I have not been buying. I sold most of my penny stocks and very few penny stocks I'm holding. That includes SENSEONICS. Okay. So as you saw my last couple of videos, most of the stocks have been oil, energy, as the Fed interest rates can be anywhere between 4 to 6 this year. So in my last video, I talked about oil potentially going to $120. When I took the video, the oil was trading at $80. Now oil is close to $92. And with potential of Ukraine war, the oil can touch easily $100 next a week or two. So that said, that is regarding oil stocks. Coming back to snowstorm in Texas and whole Midwest. So this exactly event happened last January, February also in Texas and Midwest. So at that time, the companies who actually store energies, natural gas, such as Energy Transfer, the stock symbol is ET, and EPD, Enterprise Products, they skyrocketed their stock prices and also their profits went up that quarter like anything. So I just want to mention that if anybody looking into these energy companies, I own both Enterprise Energy Transfer as well as EPD for my dividend and energy portfolio on top of lot of oil stocks that I own, including XLE. Okay, so let's talk about buying the dip and buying the stocks. Okay, so I have been buying bunch of stocks on the dip. That includes Robinhood at $10, Rivian around 50, Discovery, Peloton, Nano Dimensions, Senseonics, things like that. So each based on different criteria. Okay, so I feel 2022 lot of stocks lost like 70 to 80% value, and some of them are potential takeover targets, which including the reasons for me buying Robinhood and Peloton was the criteria they meet so cheap that they're potential takeover targets, especially at $10 and Peloton at $24. So then coming to Rivian, buying was a long-term growth story. I know Rivian has a lot of issues, but the thing is I want to hold it for years. So I bought it around 50. If it goes back to 40 or 30, I will average it, but it's a long-term growth for me. So that is how, either based on strategy of value or long-term growth, that's where, which are cheap, which fell down a lot. That's what I'm getting into. Take one example, Nano Dimensions. The reason I bought it $3 was because it has close to $1.4 billion in cash. The book value is $5.80. It traded around $3 and $3.40. So I felt it was cheap for long term to hold, and it was all the stocks were beaten down like anything, and I need to hold for long term, see value. That's the reason why I added more Nano Dimensions. Okay, so as I said, this is a strategy. Either they are potential takeover targets because they are in deep value territory, or they are good growth stocks that are beaten down, which can go up potentially when market comes back. Okay, so let's come back to SENSEONICS. So why SENSEONICS went up almost 50% almost every day for last 1 week? It touched almost $2.20 when it hit the bottom, and since the last 1 week to 10 days, it's been going up ever since they announced FDA approval. Okay, so what's happening is, so almost a month back, it has a short ratio of close to 30%. Now it has close to 20%. So what it tells me is shorts are covering because potentially 90% chance that they'll get FDA approval for their 180-day glucose monitoring system, which was already approved in Europe. So it's a matter of if they get approved for that, the potential for the price to go anywhere between $4 to $6 that is there. Okay, there is a reason I think shorts are covering. Okay, on top of that, 6 months back, if you look at number of institutions holding this stock is close to 150. If you look at now, the institutional ownership went up a lot, and number of institutions almost went up from 150 to 250. So 100 more institutions bought into the stock. That tells there's a lot of buying going on. And if you look at Fintel, if you look at the stats, almost based on last filing and current filing of last week, Blackrock increased their holdings by $1 more million. So now Blackrock owns almost 7% of the company. So that tells me that a lot of institutions are very optimistic buying, getting FDA approval, and institutions buy it for a long term. Okay, not necessarily $3 or $4 for right now, but potentially, even $6 or $10 next couple of years. Okay, that said, this I think I still consider this as a very risky meme stock. Okay, listen to reasons for what I am telling. If you think AMC, GameStop are expensive, they are, I don't know, 5 to 10 price to sales ratio. This is way expensive. So the estimated revenue for SENSEONICS for 2022 is $15 million, and at $3.50 itself, the stock market cap is $1.5 billion. That tells you it is 100 price to sales ratio, which is expensive. Technically, pharma drug companies, they do not consider price to sales ratio much, but in this case, this tells me this is a penny stock trading at $1.5 billion market cap with $15 million revenue potential 2022. Yes, certainly their last quarter revenue went up like 300%. So from 15 million, I don't think it will go 300%, right? And their main competitor, Dexcom, their stock went down in last 1 month from $480 to $420. So my point is, SENSEONICS, the reasons, those are the three reasons is going up. Potential takeover target, and then potential approval for FDA, and short squeeze, and also institutions are buying. Those are the 4 reasons the stock has been going up a lot. But if I am the investor, if I hold a lot of stock, obviously, as you guys know, buy on the rumor, sell on the news. That is true for almost every stock. Okay, so this is not a new thing even for SENSEONICS. SENSEONICS before, on the previous rumor 6 months back, it hit $5. Then it came back to $2.20. So if you didn't take any profit at that time, you almost lost 50%. So if it's hitting $4 or $5, so what I would certainly do is sell some covered calls or take some profit and keep the rest of the stock for a long term, because I do believe in long term or potential takeover target, but every stock I need to take a profit. As you see how the market went down, there is nothing long term. There is nothing long term, even these FANG stocks. Okay, keep taking profits, keep trading covered calls, sell some stock, and then rest of the stock do long-term calls, even 20 to 24, even $10, right? So for example, I wrote a lot of covered calls for $10 ending 2023. So if it doesn't hit $10, I'm getting free like 20-30% premium, and if it hits $5-6, still I can write covered calls again at the end of 2023. So that is how I'm planning to trade this stock. So I'm going to take some profit. Again, I'm going to hold the stock for some time. This is one of the penny stock, as I said. This is not based upon value, certainly. This is based upon potential point is that FDA 180-day approval and then potential takeover target. Hopefully you like this summary. Please click the like button on my video and hold on to my next video. Thank you. Have a nice day.